Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in and take a look, see what's going on today. Put that back up there. If you want to follow me, it's @_finance. If you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, looking for investment opportunities and sharing them with everyone in the community. You can get a special on the monthly or yearly memberships using the code SPECIAL that's in the corner there. So Michael Maloney says, could the silver price go vertical? Obviously, he shares his thoughts. I didn't actually watch this, but I wanted to respond. Could silver price go vertical? This is the silver price, and I want to make a couple of comments about silver and it potentially going vertical or how it would go vertical. So what I do when I evaluate things is I look at history. I look at history and I say, okay, this here is kind of like your base, your downtrend, and then your base is the double bottom here going across this way. You can see the double bottom I put. And then this is the big move that broke out there. Another big move is if you were to draw kind of a resistance line going across. Put it this way, this one went sideways for a long time there and then really took off. It went vertical when gold went vertical because gold was being held down and you needed the right market condition. The right market condition, this had increasing interest rates the entire time. And then this one was a lot of bank lending that occurred over here. It was a little bit different setup as gold was suppressed. It was held fixed at a certain price, and then it was allowed to basically run over here when silver went ballistic. I think that we are starting that this here is your consolidation. This here is your downtrend and your bottoming pattern here. This is bottom. And really, the consolidation is about to break. When you break these big patterns, the likelihood when you come out of the pattern is that it could run a good bit. And then you'll probably retest the top of the pattern. So I've got this $306, and I'm not stating that that's where we go immediately. It could take some time there. But here's the previous pattern. It looks kind of like this. If I were to throw it up on top, it would look something like that. And obviously this ultimately beat all of that by wide margin. But when we break out of these patterns, that's generally where you get a big spike higher. And silver could, it doesn't mean it has to, it could go vertical for a period of time as it breaks through and leaves the pattern, which means basically the resistance goes to nothing as you break out into new all-time highs. There's no overhead resistance with sellers still in the market. So when it was fighting through all this, it's fighting against selling pressure the entire time through here. We've seen big moves like that occur, breaking out of patterns in other commodities. It's not just XAG. We could go to XAU, which is gold. Your pattern here is your big pattern. And then the breakout of that pattern is a big move. It goes vertical. So I would expect something very similar in silver as what we just saw in gold. There is a move that's similar to that. Other patterns that have also broken, and we can see it in gold. When you break out of these, we'll call it resistance areas, they go vertical. And they really run. Platinum is in a run right now. Could platinum go vertical? Kind of did, and it still could run. It still could run. We could run all the way up, maybe even to 2,000 something bucks. Now, does anyone know for sure that it's going to run vertical and when exactly it's going to run. No, we don't know exactly. We make educated guesses based off of the chart patterns, and usually when you break out of big squeeze corners, like these corners that you get in here and here, that's when you get the big moves. And when you get the big moves, they're really hard to catch if you're trying to catch them when they're running. A lot of the times, it's best just to get in before and let it run, and you get a big move out of it, and you capture all those gains. Newcastle Coal Futures did something very similar just recently. Here's your kind of base. So this is your, I'll call this the base down here. And then when you run and you break out, you can get these like big, huge uh, runs. That's basically going vertical. Crude oil did the same thing. We had crude oil when it broke out of its pattern. The big move here, and this is a fractal from something else, but the big move was this big move here. And yeah, I captured that entire move in the oil equities. We also saw when this kind of broke out, we'll put a line going across there. So this is kind of your base. You break out, you consolidate, and then when we broke the highs, we had a massive vertical run in crude oil. We're going to do the same thing, in my opinion, in crude oil. And silver will when we start to get through the $110 level. There's resistance up there. We'll break through it, and then I think we'll really run at some point. There are other ones like copper. Copper, this is kind of that base, this base down here. It was a launching pad, and we broke out and went vertical out of that pad, so to speak. And we did pause a little bit on top of that pad before going vertical again. So I think silver is going to do something just like all these other commodities have done. Copper is doing the same damn thing. So could copper and silver run and go vertical? Yes. Yes, they could. Now, do I know the exact moment when buying pressure comes in here and is going to send it? I don't know the exact moment, but this is a bullish formation and it could be sent at any second. Maybe it takes 6 months, but yes, it could go vertical. It could. And the setup is there for that to do that. So I wanted to touch on that and kind of when things go vertical, they go vertical after breaking out of big consolidation bases. And then we usually come back and retest from the top side. So we might not run directly to, super high areas for silver, but we might run and then come back on top of it. Here, let me get a better view on this. So we could run, kind of break out of all this, run, and then come back and do something like this. That's kind of my expectation. Could we go to 70, 80, 90 bucks? Sure. Yeah, that's totally possible. Do I know it's going to go there for a fact? No. Could we go multi-hundred on a straight vertical move and do something like that? We could. We could. When you break big patterns, they don't just run a little bit. They generally run a lot. So I don't know the path. No one knows that path. But what we do know is when you break these big consolidations that you generally get a very big run. This is one of the longest, biggest consolidations. So, I mean, we could go multi-hundred. Who knows? In a pretty quick way, similar to something like this. That's very possible. Not a bad place to be topping up positions. And he's talking about SILJ here. SILJ. And I agree, you're sitting on top of patterns. But when I look at SILJ, I look at it from this perspective here, that this is more or less a launching pad. And silver with that cup and handle consolidation, when you break out of that, that's also a launching pad. Your pad is the base that you create these bottoms. So I believe that this is like kind of a bottoming, and this is going to be a base to launch from. I don't know if it cuts right through or if we get a breakout, kind of sit there, retest, backtest move. It's tough to say. yeah, I think this is going to do something ridiculous if silver uses it as a launch pad. And then this will be a launch pad. And that's why I have my opinion there. If you look at companies like NVIDIA, it also had a launch pad. When we went the last commodity bull market, which occurred in 99 to about 2011, if you use precious metals, 2008 is where that circle is, where we came back down. This was a launch pad. This entire thing is a launch pad for that. And it's still going. It's still going. But this is a launch pad here. Silver and the SILJ, again, that's how I view this. This is a launch pad or something that's coming out in the future, which could go, up quite a bit. So that's how I view it. That's kind of what I think is in store. Focus on what's never going to change, and this is Warren Buffett. So I want to read through this real quick. Uh, the article says, I recently had lunch with a guy who's close with Warren Buffett. This guy, we'll call him Jim, not his real name, was driving around Omaha with Buffett in late 2009. The global economy was crippled at this point, and Omaha was no exception. Stores were closed, businesses were boarded up. Jim said to Warren, it's so bad right now, how does the economy ever bounce back from this? Warren said, Jim, do you know what the best-selling candy bar was in 1962? No, Jim said. Snickers, said Warren. And do you know what the best-selling candy bar is today? Warren said. No, said Jim. Snickers, said Warren. Then silence. That was the end of the conversation. I think what Buffett meant was focusing on what's never going to change is more important than trying to anticipate how something might change. If you notice, Warren Buffett, he invests in a lot of these companies that do well in every market condition. So he's in like candy and beverages, Coca-Cola. He's in banks and insurance and all these businesses that are boring but are needed by society. So that's kind of how he runs things. Now, is that the right approach? It worked for him. Maybe it is. I tend to think it is if you're trying to take a long-term approach. I don't think you can be in technology because they get cycled out so often. And there's only a few companies that don't cycle out. I mean, it's very, very few. Microsoft and Apple have had pretty big runs. Amazon was one of very few companies that have done well after 2000 dot-com bubble. There's very few companies in technology. There are many more companies that are in boring industries that have outperformed technology on long-term time horizons. So companies like John Deere, Heinz Ketchup, I think Chipotle has been doing very well. McDonald's, Nike, a lot of these where they're like clothing, food, beverage. A lot of banks and insurance companies have done very well. Um, some, like MasterCard and Visa, have done very well for long periods of time. The technology sector, I think it's a lot more limited to the number of companies that can do well over very long time frames or periods. ExxonMobil's done real well too, and a lot of oil companies. Katusa says, yep, in 6 years, your chat GPT queries and Netflix binges could use more power than the entire state of New York. U.S. electricity demand is exploding from 2-3% to 20 to 25% annual growth. That's 20 gigawatts needed yearly, an entire Portugal's worth of power. Look at this projection here. Historical electricity use, and then look at forecasts of the upper bound. That thing's going vertical. Out, and that's only 2028. That's right in front of us. I'm playing this theme here with electricity. I'm playing it through natural gas. Uranium is going to be a good play for the long term. And I think coal. I think coal is going to do really well. And again, I'm playing it worldwide. I'm not playing it just the United States. I'm just playing worldwide that electricity use is going to go up dramatically during the rest of my life. Sven says, fun economic profession fact. The producer price index, the PPI, excludes import prices and hence does not directly reflect the impact of tariffs. PPI measures domestic producer prices only per the Bureau of Labor Statistics. Isn't that convenient? Isn't that convenient? I didn't know that. But thanks for sharing that, Sven. Global oil consumption reaches all-time highs. Looks like demand's not a problem there, at least for oil. An unpopular opinion, having a paid off vehicle makes you never want to get a car loan again. I've never had a car loan. I've never had a car loan. I purchased my first vehicle in when I first started working, and I had to take a small loan from my parents. The car's purchase price, I know this is ridiculous, guys. It was 8,000, a little over $8,000 for my brand new car that I purchased in 2005. Yes, 2005. In fact, the loan amount was going to be so small that they wouldn't give me a small loan for it. I was like, you know what, I'll just pay it off, over the next like couple of months or whatever, right? So they wouldn't give it to me. So my dad's like, look, I'll front you the couple $1,000 that you're short, and then just pay me back over the year. The rest of the year, which there was like 3 or 4 months left of the year. I was like, okay, that's fine. Um, but I've never had a car payment. Um, that was my car. I still drive that car today. That's how crazy I am. I still drive my 2005. It's a Chevrolet Aveo. I still drive it as a daily. And I don't really drive the car much anymore, just because I'm at home the majority of the time. But I haven't bought or purchased a new car ever outside of that one car. So that's it. That's all I've got. And I bought it. It's really good on gas mileage, and I've made all the fixes to the car myself for the most part, and it's been incredibly cheap to run, both on gas, insurance. Here's another thing. I've been running that car for like 10 years on liability only insurance. Maybe even longer than that. I might be running this car like 15 years on just liability only insurance. I'm saving on insurance. The registration on older cars are cheaper. So the way that I made all this money and saved all this money, it's by buying a cheap car and just running it the entire time. And I don't pay on insurance on it really because I've been doing liability only for like ever. The car doesn't suck down much gas. It gets, I'd say, 30 to 40 miles per gallon. And that's what I've done. It doesn't mean that's the right way to do it, but that's what I've done. I don't have loans on anything. I've never taken a loan on anything my entire life outside of my house. That's the only thing I've had a loan on. Everything else, no loans. I've paid zero credit card debt in terms of interest. Never paid any interest against me. All the interest has been in my favor. I'm earning interest on the money that I invest. I borrow no money where I pay interest against outside of my home loan, which I'm paying 2.75%. Howard Marks says, a mistake that people often make is they compare themselves with others who are making more money than they are and conclude that they should emulate the other's actions after they've worked. This is the herd behavior that so often gets them into trouble. That's exactly what they do. Now, I don't, yeah, that's a mistake. I've never, here's the thing that I've had a problem with. I've never emulated anyone um, outside of maybe my parents. But everyone else, like at work and other things, I don't really care. I don't care if other people make more money. I don't care if they make less. I'll be friends with anybody if they have a bunch or if they don't have anything. That's fine as long as we have similar interests. I'm cool as long as we have similar interests. If they want to talk stocks in the market, if they want to play sports that I like to play, then I'm good. Or if they like cars, I'm fine. I don't care if they drive a POS. I don't care if they drive a Porsche, Ferrari. I've got friends that do all those things. As long as we share similar interests and we can talk about it, that's all I care about. But I never got in the status game. In fact, I've been confused when people talk status. It doesn't make sense to me. There are certain groups of people that I've hung out in history where they cared very much about status and titles. But I never understood why. I never understood why that mattered. What they would gain out of life having a high status or title. I don't know. I just never could figure that out. Gold volatility alert. So GVZ, gold volatility index, is nearing a breakout of a falling wedge. This has led to upward gold prices in the past. See highlighted sections. Oh, that's interesting. I don't really follow the gold volatility index, but that is interesting that it is breaking out. That's a pretty solid falling wedge. I will say that. Freight futures AM update. Dry bulk, Capesize is up 5%. That's pretty big. Panamax is flat, and tankers are both flat, VLCC and Suezmax. The U.S. Department of Energy stocks ending the week of 7/11, we've got a crude oil draw of about 4 million barrels. Gasoline is up 3.4. Distillate is up 4.2. Cushing's up a little bit, but basically flat. Crude ex SPR down 4.2 there. SPR is a 0.3 drawdown. Drawdown in SPR? Interesting. So crude stocks, they're pretty low. They're still really low here if you look at the chart. We're about average for gasoline stocks, kind of in the middle there. Distillate's way out of its cloud there, very low. They're trying to ramp up, looks like refining, to get that back up into more of an average area. Cushing stocks are really low. Refinery runs are really high, so we're refining the crap out of everything. That's also where we see oil low. It's drawing into refining here, is what it's doing. And crude production is flat to down a little bit. Grady says there will be no bubble phase in this gold bull market because this time around, after the present final third bull move, the world will have a new monetary system backed by gold. This will pin gold at the highs value-wise, meaning there is no bubble. And that means this is not only a normal bull market, it is also a global monetary system reset. It is vital to grasp that this is not gold going up. It is mostly currencies depreciating. So for heaven's sake, do not miss it. There's the three big legs in gold ripping higher. And again, he thinks the third bull move, which will kill the present global monetary system. The first bull move, after Nixon ended the gold standard in 1971, done by people behind Nixon to be more correct. There it is. OPEC is holding steady on its oil demand growth outlook, projecting an increase of 1.29 million barrels per day this year and 1.28 million barrels per day the next year. The organization remains confident that the global economy, particularly in the second half of the year, may outperform expectations. Oliver says the U.S. opened the last big copper mine in 2007, before the great financial crisis. There are only 2 operating smelters in the U.S. Last year, about 29% of domestic copper mine output was sent abroad for processing, according to the U.S. Geological Survey. Imports of refined copper made up about 45% of the U.S. supply. Meanwhile, mine output has declined. A mine that produces nickel and copper opened in 2014 in Michigan's Upper Peninsula, but the last big copper mine to open was 2007, when Freeport-McMoRan, the country's largest producer, started its Safford open pit mine east of Phoenix. Proposed mines in Arizona, Michigan, Montana, and Minnesota have been mirrored in legal challenges, permitting delays, and other obstacles. And yet we are putting a tariff on copper. That's interesting. Geology rarely gets better. Management and technical decisions Decision makers will drill their best locations first 99.9% of the time. Why? Because acceleration of cash flow due to higher rates almost always yields better economics in planning scenarios, which means by definition that over time, holistically speaking, geological quality degrades. Now, some companies have amazing geology, almost homogeneous, low permeability zones, impermeable barriers, and high shale content zones are real issues in oil recovery schemes. Yeah, so over time, the good stuff gets drilled first, the crappier stuff gets drilled last. But we do have technology that's getting better. I'm not sure if it will outpace the geological degrade. Ali says, few months ago, I watched this presentation from Morgan Stanley Research revealing by 25 to 28, we're looking at a 36 gigawatt potential power shortfall for US data centers. We're going to squeeze electricity like we've never seen before, guys. This is going to be amazing if you've positioned for it correctly. But the potential shortfall in power for US data centers, that's the shortfall in the red. This is US power needed just between 2025 and 2028. That's the shortfall. Net gas will probably get lit up. Coal's going to get lit up. There's a whole bunch of stuff that's going to get lit up here. Check out this. We need to mine as much copper in the next 20 to 25 years as we've mined in the last 10,000 years, says Robert Friedland. Here's my worry. I don't think this exists. Like this amount, I don't know if we can do it. Like, I don't know if we can go up like this to this type of supply. I just don't know if the supply will keep up. And again, that's 2023 to 2050. In 2050, annual copper demand will be greater than all copper consumed from 1900 to 2022. In that 1 year, it's greater than all the other years combined. Good luck. Good luck. UAE Energy Minister says we are living in a phase of low investment. And I talked about that one last time. So that's where I'm going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Over there in the corner, special is the coupon code if you'd like to join. And that's all I've got for today. So we'll catch you next time. This is Finding Value.